Welcome to the Online Success Journey podcast, your opportunity to discover and learn from entrepreneurs like yourself. This is not your typical podcast, but a place where you can get the real story and find out how real people encounter speed bumps and detours, but journey through to find success. Now here's your host for the Online Success Journey podcast, Patience.
Welcome to the Online Success Journey podcast. This is episode 384. Make sure you click to subscribe right now so you'll never miss a journey. I post one episode each week and each guest has a fascinating story to tell.
Joining us today is Stephen Step. Stephen is the president of A Step Ahead Financial Inc. and the co-author of the #1 best-selling book, The Secrets to Lifetime Financial Security. Hello, Stephen.
Hello, how are you?
I'm fine, thank you. My audience are excited to hear your story. Just start by telling us one thing we are going to learn from you today.
Well, perhaps one thing that we can learn is that, I'm in the insurance and financial planning business, and for the longest time, even now, a lot of it wasn't done online, or a lot of it could not be done online. And my agency was actually one of the first, I think, to try to put all the pieces of buying an insurance product or an annuity or a life insurance plan or a bank on yourself system, put it all together and be able to do it all either, remotely or online. And for those people who are out there who think they have a business they can't necessarily operate online, these days there's so much technology and so many online services that that's probably not true anymore.
Wow, thank you. Let's get started with the basics. Can you tell my audience a little bit about your background, what you did before you started your business?
Yeah, so I graduated with an MBA from University of Southern California. I wasn't quite sure what I really wanted to do, but I did like business and I did like working with people. And so I ended up becoming an insurance agent with a company here in Southern California, Pacific Mutual. And I did that for about 3 years. I went through their professional agent program. And then shortly after that, I was offered a position to be a manager of a larger agency for a different company, Phoenix Mutual, where we called on successful brokers to represent that company. And I did that for a number of years. And then finally, I decided that I really was more of an entrepreneur and I really wanted to go out on my own and not be kind of locked in with the corporate structure, so to speak. And so I just decided to go out on my own and create my own financial planning business. So at the very beginning, it was purely insurance based, primarily annuities and a little bit of life insurance. And I struggled for a while, but more and more I started trying to do things that were more automated or more online or more efficient. So that I could represent more products and so that I could efficiently handle more and more clients. And basically I did that and I kept expanding. And about 20 years ago, I discovered a strategy that's called Bank on Yourself. And ever since then, I've been one of the top 30 agents in the country that use this strategy to help people basically replace the banks and become the source of their own source for their own financing. So when it's time to buy a car or another big ticket item or a down payment for a house or help pay for college, the people can borrow from themselves and pay the money back to themselves. And it not only saves the interest, but it truly recaptures the entire cost of that big ticket item back to themselves. And that's when my practice really took off. And the interesting thing was at that point, more and more things were coming online and you could do more and more online. And we actually very quickly got to the point where, long time before the pandemic, we were already doing almost everything that we do online, and having video meetings with our clients and doing most of the planning online, doing most of the correspondence back and forth with emails online, having Zoom calls. Before there were even Zoom calls, we used GoToMeeting and other services. And just more and more, we're able to make it possible, at least, for people who didn't want to come into our office or who live too far away from Los Angeles to be able to use our services to be able to do it, mostly online, or with a little bit of help from Priority Mail and FedEx as well. But to do as much of it as we can, online. And nowadays, it's pretty much all done online, except for the FedExing of contracts or checks or things like that. And even that, it can be done online if the client wants it that way. So that's kind of the history up through now.
Wow, what a background, Stephen. But why do you do what you do?
It's a good question, and there's a lot of reasons to what I do. I could probably already be retired, but number one, I really do like helping my clients, and I really do like helping the people that get referred to us or that we pick up as clients along the way, because I find that most people are not on track to hit their financial goals. They're not on track to hit their retirement goals. I read a report this morning that said most people in the United States think they need about $1.5 million to retire, yet but they're typically in their 50s and they've only saved up less than $100,000. So obviously there's a big gap in terms of what they expect to have or hope to have at retirement and what they're on track to have, if they keep doing things the same way. And so helping people realize that and take the necessary steps to create a secure retirement is a big factor for me. The other, there's some other smaller factors. For example, a lot of people pay a tremendous amount in fees, especially with what are called qualified plans here, like IRAs and 401ks and other typical retirement planning fees. And people are typically paying 1%, 2%, 3%, even 4% for managed money within a qualified plan. And I show people all the time that if they're paying somebody else 4% right off the top every year, whether the market goes up or down, whether the investments go up or down, it's pretty hard for them to, in a safe way, make a significant amount of money or to save enough for them to get to retirement. And then we show them alternatives that have almost no fees or very little fees, or certainly less than 1% in fees, that they can do it in a much better way. And one of our taglines here at the agency is that we help people achieve their financial goals without taking unnecessary risks. And a lot of people think that they have to be in the market. Their money has to work harder than they do, is one of the things you'll hear people say. And they'll take unnecessary risks to try to reach that retirement goal or to close that retirement gap. And we're always showing on a daily basis, we're showing people why that's not true and why they can do it in a safe way, in a way that's the most efficient on taxes, in a way that brings more of their money back to themselves in their own banking or self system. And for me, helping people that way, is a tremendous plus to me as well.
But do you believe in order to retire, we need $1.5 million?
Probably for most people, especially if they're kind of in middle class or upper class or the types that would seek out financial planning, because people are living longer and longer and, medical technology keeps getting better and better. And it's very common now where people are living, into their late 80s and 90s and even beyond. And if somebody retires when they're 65 or even 70, they could very easily be looking at needing to fund a retirement that would be 20 or 25 or 30 years long. And most people, when they look at that and think about it, they think, wow, I'm likely to run out of money. And one of the taglines for one of my mentors is like, what are you going to do when you're 82? Are you going to be only relying on Social Security? And can you even rely completely on Social Security? And so, there have been studies done where people have been asked, if they think they will have enough in retirement, and a huge majority usually say no. So, it's one of those areas that, where I think if somebody's been, you should have, a multiple of whatever your final year's earnings are saved up as a retirement benefit. So if somebody makes, 50,000 or even 100,000 or more, that would be a couple of $1 million minimum that they would need in order to maintain the same type of, retirement. A lot of typical retirement planning experts will tell you that you shouldn't take more than like 3 or 4% per year out of the money you've accumulated. And so if you've accumulated $1 million, they're recommending you only take about $40,000 a year out of that. And most of our clients would not be able to live comfortably in retirement on $40,000 a year. And even then, when you add in Social Security, might add another 20,000. But again, most of our clients would not be happy and consider it a nice, secure retirement if they had, less than $60,000 a year to live on in retirement. So I think if anything, most people are actually underestimating, especially with inflation, how much and medical costs they're going to have. They're probably underestimating how much they're going to have, that they're going to need.
Wow. Thank you. Let's put money aside. How do you know you are successful?
Money is always one way, right?
Mm-hmm.
And we certainly, hit those goals. But I think more importantly is if clients are staying with you year after year, if they are referring you to their friends and family, the biggest kick that I get and the biggest way that I know I'm doing the right thing is if somebody refers me to their parents or to their children, because they're saying, okay, this was so good for us. Other people in our family have to know about these things, have to know about these strategies, have to be working with Steve. And to me, that's actually the more people that are referring us and the more people that are turning us on to other members of their family, to me is actually the biggest measure of success for me.
Stephen, tell us, how can we legally save on our taxes?
Well, there are a lot of ways of doing it. My wife is actually a CPA, so when I run out of ways, I'll talk to her. But a lot. There's just a number of different ways. Different investments are taxed differently. Real estate investment trusts here in the United States are often not taxed, or not taxed fully. The growth of life insurance inside of a life insurance plan is a non-taxable, growth. The growth of annuities, we use a lot with annuities to guarantee lifetime income. Those grow completely tax deferred, and then they're only partially taxable when you start pulling out the income. So those are 2 or 3 of the most commonly used tax advantage programs that we use, and especially with Bank on Yourself and the way we design whole life insurance policies. We design them so that all of the growth inside the policy is not taxable. And when you take out loans, it's not taxable. When you pay back loans, it's not a taxable event. And then eventually when you're taking out money at retirement, it's not a taxable event either. And eventually with whole life insurance, there's going to be a death benefit, and that death benefit is not taxable in most situations either. So with Bank on Yourself and with some of our other major programs, we're showing people how they can save for retirement without taxes and create tax-free retirement income. And that will dovetail with other things that are taxable and will lower their overall taxes. So it's kind of like piece by piece and client by client in terms of the things that will make the most sense. But those are some of the main ways that we help people either minimize or eliminate their taxes.
Wow. Tell my audience about the magic moment, the day it suddenly all went right for you.
Wow. I don't think I've ever been asked that question before, but I would say it was shortly after, and this goes back a little over 20 years, when I first discovered the whole Bank on Yourself program. I really actually didn't believe it. And it took me about a year or six months to a year to really get my head around it and to really understand it. And then I had to apply it to my own situation to see if it worked before I started telling other people about it. And then I started telling friends and family members and a few good clients about it, and it was working for them. And it was somewhere in that process where I really understood that with this particular strategy, helped me help so many other people hit their financial goals without taking unnecessary risk. That was kind of like the aha moment that this should be my number one strategy, and this is where I really want to spend most of my marketing dollars and most of my efforts and most of my online presence should be centered around the whole Bank on Yourself concept. And my business, once I did that, my business really took off as well, and I was on a whole different track with growth.
For someone who's listening for the first time, how can you tell them in the simple term what is the Bank on Yourself strategy?
Okay. Well, without getting into detail, and of course, on each case is completely different in terms of the funding and their goals, and all of our planning is basically around their goals and their situation, and what they're trying to accomplish and what money they have and what places right now. But Bank on Yourself is, for lack of a better term, we're taking dividend-paying whole life insurance, and we're using it in a way that maximizes the benefits of those types of investments or that type of product, if you will. So, for lack of a better term, we're kind of overfunding whole life insurance policies. And the reason that we're doing that is that the growth on the cash value is about 4%. And then we're using mutual companies to pay a dividend. And so that dividend, which actually starts out relatively small, but gets larger and larger every year, and being added to that policy. So for most of our clients, after a few years, their policy is earning 4 to 5%. It's growing without taxes being taken out. And if nothing else, it's a great long-term, safe, tax-free savings vehicle. But the other way that is actually much more powerful thing about Bank on Yourself is that while those cash values are growing without taxes being taken out, you can borrow against those cash values to pay for major items. So, for example, most people, they'll buy a car, they'll either pay cash or if they have it, or more likely they'll go to the car dealership and they'll start making payments of, say $500 a month for the typical car. And they'll continue doing that for 4 or 5 years. And then they'll be done paying the interest and the principal, and all the interest and all the principal for that purchase went out to somebody else's bank. It either went to whoever the car dealer uses or the bank or the finance company. But let's say it was a $40,000 car. All of that money went out plus interest to somebody else's bank. So we show people that once they've accumulated a certain amount in their whole life insurance policy, that's growing safely year in and year out, now they can borrow that cash value. They can always borrow about 90% of that cash value. They can borrow that cash value and buy the car. They can get a great deal on the car because they're paying cash. Typically our clients are buying cars that are 1 or 2 years old, so they're saving money that way also. But even if it's a brand new car, and then they're paying that money back, they're making the same payments that they would have had to make to some other bank or to some other financial institution, and they're paying themselves back, and they're putting that money back into their own policy. And then at the end of when they're done paying for the car with the same money that they would have sent to another bank or a finance company, they have that money it's been recaptured completely back into their own policy. And then they can do it again and again with that same money. They can reborrow that same money for the next car, the next car, the next car. Or like in my case, 3 years ago, I needed to put a new roof on my house. I didn't have to worry about where I was going to get the money. I borrowed it from one of my bank on yourself policies. I paid it back over about a 3-year period of time back to my policy. And once I paid that money back into the policy, I had the exact same total cash value, the exact same dividends, the exact same tax-free death benefit that I would have had even if I had never taken out that loan. And so this whole idea of being able to finance and then recapture the entire cost of big ticket items back to myself is something that all of our clients can do, and a lot of them do. And this concept used to be called the infinite banking concept. And the reason the term infinite was used is it can be applied to anything. It can be applied to cars, college education, financing vacations every year. Whatever big ticket items that people would otherwise go to a bank to borrow the money for or put on a credit card, they can easily use their own money and substitute themselves as the bank. And then ultimately, the whole idea with banking yourself is that at the end, you're going to have all this cash value that's been building up into your policy. And so at retirement time, you can start taking that money out completely tax-free as well. And of course, we have to design it right and keep it within certain limits so that it's defined as a whole life insurance policy and not looked at as like an investment. But we do that. And then at retirement time, it's a great source of tax-free income that can be taken out over like a 20 or 30-year period of time. And then ultimately, their family, if they don't live a long time, or even if they do, sooner or later, there's going to be this tax-free death benefit that's much more than the cash values ever were. And that's going to go to their family or their charities or whoever they name as their beneficiaries on the life insurance. And the whole thing works typically when we're designing it that way, it works completely tax-free.
Should you convert your RIA to Roth IRA?
That's another thing where it's going to be determined on the person and their particular situation. I mean, it's obviously great to convert to a Roth IRA because then all the future gains are not taxable. And when you take the money out, it's not a taxable event. So those things are great. However, normally to convert like from a regular IRA to a Roth IRA, you do have to pay the taxes on the original IRA, right? Now, sometimes it makes sense. For example, if somebody has a year, like we had a lot of people that during the pandemic in particular, they had years where their income was a lot lower than it typically is. And when that's the case, then converting a regular IRA to a Roth IRA would make a lot of sense because you're paying taxes at a much lower rate because that's a low tax year for you. And so a lot of times in that situation, it would make sense. But for somebody that's in a high tax bracket and already was in a high tax bracket, and that really didn't change, that may not be the best thing. And again, we take kind of a holistic approach to our planning. We'll sit down with our clients and we'll look at everything that they have and all of their goals and kind of look at it all together. And so it's really hard to say, everybody should convert a regular IRA to a Roth IRA. But if they're in a relatively low bracket and the IRA is not doing that well in particular, then converting it into a Roth IRA and getting it into something like an annuity can make, a lot of sense.
Thank you. What is one thing that has contributed to your success?
I think one of the biggest things is that myself and my agency, we are very big on service. If somebody calls us before 3:30 or 4 o'clock on a given day a given business day. We're either going to take that call or we're going to get right back to them if we're in a meeting, we'll get right back to them. And we'll usually handle whatever their question or issue or request, was on the day that they called. Now, if they call a little bit later, or if they call in the evening, or they email us later in the day or in the evening, then it may be the next day before we're able to, either get back to them or solve their question, answer their question or solve their issue. Especially if we have to go to one of our companies and, they're back east and they may already be closed. So it falls into the next day. But in general, I'm very big on providing really excellent and very timely service for our clients. And I think that these days, even as automated as we are and as much as we are online, people really appreciate that. And I think they really keep coming back to us and refer us because they know when they call with a question or an issue, we're going to handle it. And you oftentimes in the same phone call, or we'll be on the phone with them and we'll go onto the computer and we'll check out their account and we'll look at things and we'll make the call and we'll wrap it up, whatever was their concern or their issue, pretty much when they call or shortly thereafter. And I think that's been one of the, that plus, really excellent advice that we've figured out over the past 30 years of financial planning. So good products is a big piece of it, obviously, and good plans are a good piece of it. But I think more and more these days, people really appreciate excellent service.
Tell us how to create a guarantee income for life. Is it such a thing?
Yes, there are. Matter of fact, annuities, tax-deferred annuities, index annuities, and what sometimes people call immediate annuities are all designed to create, at some point, you're saving up and building up the accumulation, but at some point in each of those products, the idea is you would start taking out a regular income. And many annuities can be turned into, either have a lifetime guaranteed rider on the payout. And it's very typical to see annuities where if it's being designed for income, especially if it's in an IRA or a 401k, there's a roll-up rate that's guaranteed to be like 7 or 8% and a payout rate that's guaranteed to be between 6 and 8%, or 6 and 7%. And for most people with an IRA or a 401k, that's the best way to use it. And so it's very interesting because the insurance companies that are out there, a lot of them will write both life insurance, right? And they also write these annuities that we work with. And so they're balancing things on both sides of the scale because life insurance protects you from not living long enough, right? If something happens to you early on and you have a family that's dependent on you, the life insurance steps in and protects your family from that. And annuities are actually designed the opposite. They're designed to protect you from living too long and outliving your income. And so, yeah, there are all kinds of annuities that either set up with riders that have an income rider that has a guaranteed payout for life, or that can simply be structured that way. So, yeah, they're definitely a possibility.
What grounds you?
What grounds me? I think my family. Whenever I'm maybe start wheeling out of control, my wife or my daughter, or my mother, or maybe even my assistant, somebody close to me will bring me back to reality and grounds me.
Wow. Thank you for sharing. Tell us how to grow your savings on the market upswings without losing a penny in the down years.
Again, for most people, everybody's going to have some amount of market involvement. If they have some success, they probably have a 401k at work. or they're investing, in the market. And I think it's just a matter of degree. Even when cryptocurrencies, for example, were a big thing, and I'm not a big proponent of them, but if somebody said, hey, I want to have 1 or 2% of my savings going into crypto, then why not? Because, if it works out, then that 1 or 2% will have made them, a nice piece of additional money. But at the same time, it's only 1 or 2% of their total. So, and everybody's risk tolerance is a little bit different. And there's a great place for equities, and stocks and bonds and mutual funds. We don't actually sell those. We actually refer clients to people who do that all day, every day, and don't really do the planning that we do, and the tax work that we do, and the personalized service that we do. So for most of our clients, it's a small piece of, it's their higher risk piece, and maybe it might be, 10 or 15 or 20% of their net worth. But beyond that, we like to actually, counsel them out of those things and into, the whole life policies, and into guaranteed annuities, and into annuities that have a guaranteed retirement, benefit. And if we're careful, and most of our clients are really good savers, I have to say that. And so for people who are really good savers, they're going to be drawn much more. They're not going to want to lose their hard-earned savings. And they really don't like the ups and downs of the market. And they really don't think it's really a fair game for them. And they don't really have access to the information that would make them an insider, or that would give them knowledge that everybody doesn't have now. So I think for most, they like the idea of having some money in the market, but for most of our clients, that's not the money that they're really planning to retire on.
Let's talk about your business. Tell us more about it.
Well, we are a financial planning outfit. We sit down with a holistic view of our clients, and we'll sit down, and some of the first questions that we'll ask a new client or a new prospect is what their short-term and long-term financial goals are, what they're doing to reach those goals now, where they think they're doing well, where they think they're not doing well. And we're going to come back and make recommendations that will help them fit their particular goals, right? If they're hitting their goals, then they're going to be happy with it, and we're going to be, happy as well as, as a result. And so I can design a great plan for me, but if it's not hitting your particular goals, then that's not going to work very well. And it's your goals that are the most particular. So every case is going to be different. And I think what makes us, we're willing to sit down and recommend gold and silver if that, makes sense for them and their risk tolerance. We're willing to recommend that they put less into their 401k or their IRA and put more money into Bank on Yourself or a regular annuity. We're much more likely to recommend a tax strategy where they can have some tax advantages or take advantage of some tax deductions that they may not have known about. We'll remind them that taxes and what they pay for, interest and on their cars and their houses and their vacations and anything else that they, have run into debt with, how those things take away from, their proper planning. And we kind of put all of that together and then make recommendations, based on that and taking kind of more of a holistic approach and of course where it fits, Bank on Yourself and proper use of annuities and just tax strategies, in general and is the biggest thing. Most people, for most people here in the United States, are put money into a 401k. It's kind of an automatic thing that they do at work. And besides paying fees of between 1% and 4%, they're usually not very well managed. The people themselves are not financial planners, so they don't know what to put the money into. And then when they'll even leave the company and leave it, with the prior company and not even roll it over to the new company. We encounter that with people all the time where they have old 401ks or old IRAs from other, companies. They haven't even rolled it over into something that they can control. So I think if we cover those types of things with our clients, they're automatically going to be, much better off, and they don't really have to take market risk or a lot of market risk in order to be able to hit their financial goals. And again, if they're a good saver, that's going to be even easier for us to do.
Thank you. Where can we find your agency and how can we connect with you?
Yeah, a number of ways. Anybody can, on the website or on our connections, can go to connectwithstevenstepp.com. So it's CONNECT, connectwithstevenstepp.com. They can also call us on our 800 number, which is 800-245-4677. That's 800-245-4677. And if somebody wants to, they can also email me directly to stevenstepp@sbcglobal.net. So it's my name, stevenstepp@sbcglobal.net.
Thank you. There will be more from Stephen in a moment. If you are encouraged by Stephen's journey, please go to my website at onlinesuccessjourney.com, where you will find more amazing free content. Are you struggling to achieve one or more of your major goals? Do things like fear, confusion, and overwhelm get in your way? Then maybe I can help. I work with clients to help them get unstuck and make massive leap forward to create their dream life. Go to onlinesuccessjourney.com/coaching and let's chat on Zoom to see if we are the right fit for each other. That's onlinesuccessjourney.com/coaching. Now, Stephen, I would love for you to share more with my audience.
Yeah, no, absolutely.
Thank you.
Again, if you're in business and you're online or not online, but you're an entrepreneur or you're running your own, business or people in your family are, I would say number one, really provide the best service that you possibly can. When there's issues or questions or problems, even if everything is automated, things happen, things go wrong, people have problems, to really be, very quick to address those issues and problems, and to really make it, as personal, as you possibly can. I look at all my clients, they're not numbers, they're individuals that have come to us, with very particular sets of goals and, and dreams and finances and money. And they're trying to put it all together. They're not financial planners, and no one in their family is a good financial planner. And so they're really trying to, figure it all out in a way that makes sense to them. And I think more importantly, they're really looking for someone who gets them, who understands them, and will provide that level of individualized, personalized, service that really, so they really feel, like a client. There's a place that I go every other day for a protein shake, and they know everything about me. They know my name. They know when I usually come in. They know what I'm likely to order. They'll joke about things about my business. They'll ask about, my family. And, even though there's another new, maybe even better store a few blocks further, from them, I'm not going to go somewhere else. I'm going to be loyal, and I'm, going to go to them. And so I like my clients to feel that way, about us, that because they're going to get hit by all types of other financial planners and marketers and other agents and other companies, probably on a daily basis, especially if they're successful. And I don't want them to forget about us. One of the things that we do is we do an almost weekly email that we mail out to almost everybody in our database. And it's not because each piece that we do is so brilliant. Sometimes it's just a holiday greeting or reminder. We send out birthday cards to every single client. We send out anniversary cards to every single one of our married, clients. Because we want to make it very clear to them that they're important to us, and that we really look at them as an individual and as an individual family, and that we're here to we have their back, and we're helping them get their financial goals. So I would say, providing that level of service and that level of care is probably the number one thing that you could do, regardless of what you're selling, especially if it's an individual or small company. The other thing is, obviously you want to be honest and forthright, and you want to have good products or good services that, really do help, somebody. If it's some type of scammy sale or something that's not, completely legitimate or legal, or whatever the case may be. And I've seen tons of them. There's people in my business who try to copy us, but do it in a bad way, or use inferior products, or don't have a lot of experience, or don't really have the client and customer in mind. They're not going to last very long, especially these days, and especially if they end up hearing about us or coming to us. So I would think that those things are, obviously you have to have a good product. You have to have a service or a product that people want and need and use. But then beyond that, I think it really comes down to, being as one-on-one and as personalized. And especially if you have an online product, it's easy to become a number. It's easy for your clients to not feel that they're properly being taken care of, or when they do have questions or issues, that it's not being dealt with properly or in an efficient way. And again, I think more and more people really appreciate that level of personalization and that level of service on whatever it is that they're doing.
Thank you. Will you ever stop?
Will I ever stop? That's a really good question. Probably another 10 or 12 years, I'll probably just get to the point where I may want to do other things and may want to be kind of phasing out of what I do. But right now, I don't have any plans to stop. And, I joke with my clients, I could probably be retired now, but I don't play golf, and I wouldn't want to spend all day at home. So I don't know what else I would, what else I would be doing if I wasn't doing this. So certainly no immediate plans to stop, but maybe 10 or 12 years down the road, it might make sense.
Remind us how we can connect with you.
Let's connect with StephenStep.com, or call us at our 800 number, 800-245-4677. Or if they want to email me directly, they can email me at StephenStep@sbcglobal.net. That's StephenStep@SamBakerCharlieGlobal.net.
Stephen, it's been great to have you here to share your business with us.
Well, thank you for having me. It sounds like you have a wonderful show, and you're helping all these people in your own way, which I think is fantastic.
Thank you. Remember, success is a journey. Don't wait. Let's start the journey. Patience and Stephen.
This is not the end of the journey. We hope you've enjoyed listening to Patience and her guest, and want you to know that there are hundreds of episodes available at onlinesuccessjourney.com. Patience would like to thank you for listening to the podcast, and she has a free gift for you on her website, including an audio compilation of her guests' best tips, uplifting stories, and even a bit of fun. Additionally, there are special clips of over 250 episodes that have never aired on the podcast and are only available to members of the Online Success Journey. Check the website and click on Join Now to get free and instant access. Of course, you know that listening to the journeys of others helps us each chart our own path. So make sure you're subscribed on the favorite platform you have to be notified as each new interview is posted. There are so many ways to stay connected to the Online Success Journey and listen in. And if you're enjoying the podcast, we appreciate your help in telling others. One of the best ways to share the benefit you get is to rate and review the podcast at Apple Podcasts and other sites. We appreciate your help and your willingness to share the journey. One last thing. If you're feeling a bit lost or overwhelmed on your own journey, Patience can help. Check out our coaching sessions on how to set goals and double your productivity while you're at the website. Working with Patience is a great way to get back on the right path. On behalf of Patience, and until next time, thanks once more for listening. It is our hope that this podcast will guide you on your own online success journey.